Hey guys, welcome back to a brand new video. I'm RexFinance, and today we have something pretty special to talk about. Today in the stock market, it was really no exception. The volatility remained insanely high, where the market indices actually opened green before tanking, before going way green, before tanking again, before going green again, before ending the day red. As we can see on the screen now, the Dow Jones Industrial Average finished down about 0.56%, the S&P 500 finished down 0.73%, and the NASDAQ finished down 0.28%. But if we dig a little bit beneath the surface here, we can see that something really special is taking place right in front of our eyes. If you look at the small cap 2000, also known as the Russell 2000, we can see that the small caps actually had an insanely green day. They finished up 1.01% on the day. And I can tell you right now that this is by far the best bullish indicator we've gotten, signaling a market bottom. So in today's video, I'll be explaining to you all of this in my thesis on what exactly is taking place in the stock market right now. But before I dig deep into this, let me know down in the comment section down below if you've been buying the dip. And if you have been, let me know the exact stocks you've been buying. Also, let's aim for 200 likes on this video, and if you guys are new here or returning not yet subscribed, I would greatly appreciate hitting that subscribe button. But without further ado, let's go ahead and get into the good stuff. First of all, as I'm sure you can tell by the title of this video, I am all in on this market. I truly am putting my money where my mouth is with this video, and basically what this means is that I am less than 10% cash right now, and my Roth IRA is actually fully contributed and fully invested right now. So again, my money is where my mouth is with this video. But what exactly is going on in the markets? Well, today I already covered that small caps vastly outperformed the rest of the market. The reason this is such a bullish indicator is because it is always these small cap stocks that lead us into a stock market correction, and it's also the small cap stocks that lead us out of a stock market correction. And I know this is just one day, but even if we zoom out, we can see that since January 27th, these small caps are up 1.71%, while the S&P 500 is down almost 3.5%. So the Russell 2000, these small cap stocks, have been outperforming the rest of the markets for almost a month now by almost 5%. That is not pure chance. That is not pure luck. There is something truly going on underneath the surface here, and in today's video, I'm going to break that down for you. On the screen now, I'm showing you a comparison of the Russell 2000 small cap index compared to the S&P 500 coming out of the 08-09 financial crisis. This way you'll know that I'm not just all talk and spewing opinions out here. These are facts, that small caps generally lead the way out of market corrections. Throughout the year following the 08-09 financial crisis, the Russell 2000 returned 95%, while the S&P 500 only returned about 68.5%. The reason this happens is because small cap companies are less likely to be profitable and more likely to be actually pushed into bankruptcy. So investing in small caps is generally more risky than investing in the S&P 500 or mid and large cap companies. Because of this, whenever the markets even get a first whiff of fear, uncertainty, or doubt, the first stocks to fall are, of course, the risk-on stocks, which happen to be these small-cap companies. This is exactly why we can look to these small-cap stocks as a great indicator of potential market corrections coming. However, the opposite is also true. Whenever the markets start to exhibit risk-on behavior, typically these small-cap stocks are the first ones to rise because they're the risk-on investments in the stock market. So now at this point in the video, you might be wondering why the markets are exhibiting such risk-on behavior right now when there's so much to be fearful and uncertain and doubtful about. Well, it actually all has to do with this Russia-Ukraine conflict. This Russia-Ukraine conflict has actually been bullish for small-cap stocks. I know some of you might think I'm crazy when you hear me say that, but let me break this down for you. The first reason that this has actually been bullish for small cap stocks is because the likelihood of a prolonged low interest rate environment has gone up exponentially as a result of the Russia-Ukraine conflict. And we all know that a low interest rate environment is very, very good for smaller high growth companies out there, because they have easy and cheap access to capital that they can invest into their business to grow their business. Prior to the Russia-Ukraine conflict, the vast majority of investors felt that the low interest rate environment would have to come to a close in relatively short order. But the Russia-Ukraine conflict has stretched out the likelihood that this prolonged low interest rate environment would actually continue going into the next year or so. So obviously it's pretty easy to see why these small cap stocks have been getting some relief lately and actually vastly outperforming the rest of the markets. Reason number 2 that this has been bullish for small cap stocks is actually because oil prices have skyrocketed right alongside the rest of the rare earth minerals. It sounds counterintuitive at first, but let me explain my thought process here. Whether you like it or not, President Biden has taken this opportunity of high oil prices and high rare earth mineral prices to push his green energy agenda. And we all know that green energy stocks are typically smaller companies with high growth in front of them. So as a result of President Biden pushing his green agenda, it's actually created numerous risk-on investors in the stock market, where the stock market is actually going more risk-on into green energy. But it actually expands beyond green energy, and this is why small caps in general are seeing a big boost in share prices lately. Sure, it's green energy plays in particular that are getting a boost from President Biden's commentary on green energy. For example, if we look at today, Tesla was up about 2.5%. Enphase Energy was up almost 11%. Beam Global was up almost 13.72%. ChargePoint was up over 5%. And Flux Power, a battery manufacturing company, was up over 10% today. So green energy very clearly is getting a big boost from this green energy agenda. However, the reason I say this is actually breeding risk-on investors beyond just the green energy stocks is because we can also look at stocks like Matterport, which was up about 3% today, Shift Technologies, which is up about 14.38% today, or Purple, up almost 7% today, and ASTS, literally a space company, was up over 7% today. So even though green energy stocks in general had a big boost in share price today and lately in general, it's also these other risk-on stocks that are benefiting. The markets are literally starting to buy risk-on investments as a result of this Russia-Ukraine conflict. Another asset that I didn't cover, Bitcoin, is up almost 5% today from yesterday's lows. Bitcoin is a great indicator of risk-on behavior in the stock market. So just to review all of this, although it sounds very, very silly, the Russia-Ukraine conflict has actually been very bullish for small caps. Whether that's because interest rates are going to remain low or just because of the risk-on behavior that's starting to take place in the stock market, small caps have been benefiting as a result of this. And again, small caps almost always lead the way out of a market correction. And very obviously, the markets in general, the S&P 500, any index you look at, is in a market correction right now. So if this all continues, I like the chances that right now the markets are actually bottoming. One last thing I wanted to look at in today's video were the forward PE ratios of large caps, mid caps, and small caps. For the longest time, valuations on large cap stocks were astronomically high. Literally, we had not seen them since the tech bubbles. However, according to data that was published on Friday of last week, not even factoring in the negative 2% move we saw on Monday for the S&P 500, or the additional negative 0.56% move today we saw in the S&P 500, the S&P 500 large cap stock valuations have actually come back down to pre-COVID levels. That is a big deal. Small cap valuations have been compressed and beat down for over a year now, and mid cap companies have been the same. Both small caps and mid cap valuations are pretty much at lows. As investors, literally all we've been waiting for is the large cap valuations to fall back down before our favorite stocks could resume their upward trajectory. Well, obviously, it appears that this is finally taking place with large cap valuations finally getting to more reasonable levels. So taking all of this into account, I really feel that we have bottomed in the stock market, especially with small cap companies. I'm also at ease and very confident in the fact that I am less than 10% cash right now, and I'm pretty much fully invested in the stock market. Obviously, anything could happen. I'm not a financial advisor. I could be very wrong about my personal predictions here. But these are my own opinions, thoughts, and ideas that I've shared in this video, and it's up to you to come up with your own conclusions. Again, let me know in the comment section down below what stocks you've been buying, if you've been buying stocks. Also, let's aim for 200 likes this video. And lastly, if you guys are new here or returning and not yet subscribed, I would greatly appreciate hitting that subscribe button down below. With that, I hope you have a great rest of your day. I'll be back with a brand new video later this week. Peace out.